In this video, I'm going to cover everything that you need to know before starting a career in the commodity industry, so you can decide for yourself whether it's worth considering a career in the commodity industry or not. Because I'm not going to lie, it's going to be a tough road ahead, but it's fun. And if, like me, you believe in burning the candle at both ends to have a life worth living, commodity trading will give it to you. And seriously, 5 years down the road, when all your friends went to become bankers, lawyers, consultants, or middle managers in an insurance company, you know those soul-sucking jobs where everyone eats a salad at his desk with a Diet Coke during lunch. So 5 years down the line, compared to all your friends, you'll be the one with all the stories, all the travels that you've made, all the people that you've met, and all the scams that you had to avoid. So if you are new here, I'm Damien, a former commodity trader from Switzerland, and I'm involved in a bunch of businesses related to commodity trading, trading business, a financing business, and an educational business. So if you want to start in the commodity industry, there is a lot of type of jobs and a lot of different career paths. So here I'm just going to give you like 5 different types of jobs, just for you to have a bit of understanding of how the industry works. So first, there is the operator or the traffic officer. They are the ones that are in charge of executing the physical side of a contract. For instance, let's say that a trader bought a cargo of Russian crude oil and wants to sell it to a Chinese customer. The operator is going to be the guy that makes sure that the cargo arrives on time at the port of loading in the right quality within the specification. That is going to make sure that the tankers arrive on time. Then he's going to give the instruction to the tankers so it can unload the cargo to the port of discharge and so on. The operator is the one making sure that the contract gets done properly and smoothly. An extremely important role. Then we have risk officers. They are the ones that make sure that the traders or the overall risk of the company is in line with their risk management policy. In some companies, we even have risk officers that do the hedging for the traders. And we have compliance officers. They are the ones that make sure that the company complies with all the rules and regulations that our overlords put on us. Then we have also trade finance officer. They are the one that finds the liquidity to finance the trade. So basically they get a contract from the trading floor and they say, okay, for that contract, we are going to use that bank. Okay, for that contract, we need to find some alternative source of capital and so on. Now we also have a lot of sustainability officer. Basically, they are the ones that make sure that the commodity or that the company follows some type of ESG profile or ESG KPI. I've also seen sustainability officer setting up a carbon credit project. And even in the trading side, there is a lot of different type of traders. The bigger the company gets, the more segregated are the traders. There are ones that are called originators. They are the one in charge of purchasing the good. There are other ones that are called business development, for whatever it means. There are ones that are paper traders, so they are the one executing the hedging strategy or speculating. So yeah, there is a lot of different titles. I mean, you can even hear that some of them are called merchandiser. So they are the ones that sell the commodity. I mean, so yeah. A common question from young professionals is that they are all afraid of being stuck dealing with a commodity that they don't like. Oh, I'm stuck dealing with lead, coal, hydrogen. So first, this is true. When you are a senior trader, it's very difficult to move from one commodity to another because it makes sense. It's in your skills, your knowledge, your network. It's very difficult to translate that to another commodity. So in that case, yeah, you're kind of stuck. But besides senior trader, it's quite easy to move from one commodity to another. As an operator, you can switch from one cargo type to another without too much constraint. Same for the risk officers, same for the trade finance people. So yeah, it's not that difficult. I mean, even for a junior trader, I would say it's still quite easy to switch from one commodity to another. But the older and the higher paid you get, yeah, you are more specialized and there is fewer companies that could pay you what you think you're worth. And actually, this is the same problem for every industry. For instance, let's say that if you are a VP or an executive in the automotive industry or in the consumer electronics or so on, the more specialized you get, the higher your salary, the less job will be a fit for you. The largest commodity firms have become so huge that the way they work is entirely different of what is going on in a small or medium company. It's like comparing McDonald's and your local burger restaurant. They both sell French fries and burgers, but the comparison ends there. The jobs are way more compartmentalized in a big company than in a small company. So in a big company, that's for sure that you are going to be way more specialized faster. But I still think that if you were to start tomorrow in the industry and you had a choice between a small company and a big company, I would go to the smaller firm. Of course, you would be paid less. You will have a better understanding on how the full logistical chain works, and it would set you up for better success in the future. If you agree or disagree with it, please leave a comment in the description below the video, because I would be happy to hear you what you think about that. Oh, man. Work-life balance. I mean, think about that. Do you really think that a tanker just stopped its operation because it's Saturday? Or do you think that, like, I don't know, your utility company, your coal plant that gives you electricity is going to stop because, I don't know, it's Christmas and everyone has to be at home? No, man, no. Man. And a little story about that. I used to be in charge of a lot of Muslim country when I was a trader. And in a lot of Muslim country, their weekend is Friday and Saturday instead of Saturday and Sunday, how it is in Europe or in Latin America also, I think, and so on. So that means that when one of your clients calls you on the Sunday, you've got to pick up the phone. And yeah, if you don't do it, then there is less chance of you of making a deal. I mean, yeah, so this is the kind of commitment that you've got to do if you want to be the best. Do you really think that all the dudes that became multimillionaire when the Glencore IPO'd, do you think that all those dudes, they were at home at 5? I'm not really sure that they know their wife's name, to be honest. Okay, so it's a complicated subject. It's like, how do we say, like teenage sex, you know? A lot of talks, but not much action. No? So I'm going to tell you what I've seen, but there's always a lot of exceptions. Usually in a small firm, there is almost no speculation. Because it just got them too risky. I mean, the owner of the company, this is his family wealth, and he knows how merciless is the market, so they, they don't want to take that risk. Yes, maybe there is some speculation here and there with extremely small position. For whatever reason, they see that there is like a risk-reward ratio which is extremely favorable. So then, yeah, they would like place a very, very small bet. But usually in those small companies, there is no speculation. But now, what about the big firm? They are the ones that do most of the speculation. But here, again, it really depends firms by firms and commodity by commodity. In some big firms, they have like a macro view. So they will build up a position like a macro hedge fund would do. In other firms, they would only take like speculative bet when they have an extremely clear view of what is going on in the supply and demand in the few regions. So it really depends. And also in some extremely competitive markets, it's almost impossible to have margin by doing back-to-back deals. So that means that to be in the market and to serve your client, you need to speculate at least a little bit. So I know when I said this out loud, it sounds completely moronic to be involved in those markets, but this is what big firms do, because they need to have the market knowledge of what's going on in this region of the world for whatever reason. What is the trader's favorite word starting with a B? Bonus! So yes, the money in the trading industry is good, but it's actually less than if you work in the tech industry or in investment banking. Here is a survey run by Michael Page, a staffing company. So it will give you a good idea of the salaries level in Switzerland, but it's roughly the same level in Singapore or in any other big hub. So this part is important. We have observed large gaps, discrepancies between sectors and company side. I will make this PDF downloadable below the video, so just click in there if you want more information. So that's it for me today. I hope that you liked the video. If you are interested in breaking into the commodity industry, please click the first link below this video and you will end up on the Shipping Commodity Academy website. Of course, let me know what you think about this video. Did you like it or not? Do you agree with me, or you think that I'm full of shit? Please let me know. Ciao.